understand what Bitcoin is, let's understand why it was invented. And to do that, we need to go back in time to 2008. Bear Stearns collapsed, and then Lehman Brothers did. This was unprecedented. The government took over Fannie Mae and Freddie Mac. Nobody knew what was going to happen next. The Reserve Prime Money Market Fund broke the buck. It was the first money market fund in history, and at its peak in 2008 held $60 billion in assets. Investors thought the reserve fund was just like a bank savings account. Stable, $1 value, daily liquidity, super safe. But it paid a much higher rate of interest than banks paid. And thanks to their success, lots of money market funds popped up. Everybody was happy. Clients, advisors, brokerage firms, the mutual fund companies that created them. All of these funds were stable, pegged to the dollar, just like bank accounts. But what most people never bothered to pay attention to was the fact that half of the prime reserve's money market assets were invested in commercial paper, not U.S. Treasuries. Companies like AIG. So when the 2008 credit crisis hit and those companies collapsed, well, their paper became, suspect. And bam! Prime Reserve broke the buck, meaning its share price, which was always $1, fell below $1. Well, that sent panic throughout the entire financial system. Suddenly, everyone everywhere realized that their money market fund might do the same thing. This started a classic run on the bank. People sold their money market funds. They sold their stocks as well. If money markets couldn't be trusted to be safe, how could stocks themselves be safe? And well, we all know now what happened next. The reaction was pretty swift in 2007, 2008. Everybody got involved. The SEC, the Federal Reserve, FDIC, Congress, the Treasury Department, the White House. The SEC banned short selling. AIG took a $150 billion bailout from the federal government. Goldman Sachs and Morgan Stanley both became bank holding companies so that they could qualify to take bailout money. The FDIC seized Washington Mutual, at the time the nation's largest savings and loan, gave their assets to JP Morgan. Wells Fargo acquired Wachovia, the fourth largest bank in the country. Bank of America bought Merrill Lynch. This was all shocking, unprecedented. It was happening with incredible velocity. Congress ended up approving a $700 billion bailout. Nothing like it had ever been seen. This massive infusion of dollars, this incredible activity of government intervention, well, frankly, it didn't calm anybody's nerves. In fact, it didn't restore confidence at all in the financial markets. And as every one of those announcements were made, as every one of these developments were demonstrated in the market, well, the market just kept falling further and further and further. Now there was a huge fear of asset devaluation and future inflation. All of this fueled by a lack of trust in the government's behavior during the 2008 credit crisis. And then along came Satoshi Nakamoto.